Think only the wealthy can purchase notes? Think again. When I first learned about purchasing notes, it was a wild several weeks. I learned how to use the financial calculator, which in itself would forever change the way I looked at money. It was an easy decision to decide which side of the cash register I wanted to be on. Secondly, I learned about flipping notes onto private investors and funders, people with the money to purchase deals. In exchange, I would receive a handsome referral fee, costing me relatively nothing out of pocket. Lastly, I learned although you could earn great money flipping notes, you could get wealthy owning notes. The only problem with the last one was that I really didn't have a lot of money at the time. I wouldn't say I was living month to month, but I certainly did have $100,000 to start investing in notes for myself. Enter the small notes. There's a false perception to outsiders that you need hundreds of thousands of dollars to start building your own investment portfolio. A matter of fact, nothing could be further from the truth. With nearly 6% of all real estate notes involving some kind of owner carryback financing, you can be sure there are notes of all sizes and fitting lots of budgets. Take land notes, for example. These are notes where the name fits the collateral. They are notes secured by land. It could be residential land, commercial land, raw land, any type of land. Typically, there are residential lots, but if you see a chunk of land, there could be a seller carryback note behind it. In 2018, there were over 12,000 land notes created using seller financing for a total of $7.37 billion in debt. And that's just 1 year. Those land deals range in size from the smallest parcel to the largest pieces of commercial property. But since we're talking about small deals, let's look at what it can do for someone just starting out. So, Stuart, Florida, residential lot, no house on it. Sale price is $15,000. Down payment, $4,000. The note is $11,000. The interest rate is 10%, and the payment amount is $145.37. That makes the term 120 months. Now, the payments made were 22 so far, payments remaining 98, and the current balance being $9,709.27. Purchase price is $7,500 or a 50 ITV. Investment to yield is 17.74%. Now, I don't want to confuse yield with dollars, but I do want to illustrate a point. If the note pays each month, doesn't pay off early, your $7,500 investment will grow to $14,246 by the time the note is paid off. You can now buy a bigger note or two notes of the smaller size. Not only is investing in small balance notes something to consider, they come with 4 major benefits. Number 1, minimize any risk by spreading your money into more deals. 2, higher yields. Number 3, lower ITVs. And number 4, less competition. You can purchase these deals using a self-directed IRA where the payments go into the account and any tax, if applicable, is delayed to sometime in the future. Another category of small notes is what's called a second position notes or seconds. Second position notes are oftentimes behind a larger first mortgage. Their priority is exactly as it sounds. In the event of a default and the property goes to foreclosure, the first person to get paid is the person holding the first position note. The second person is the second, and so on. The problem is that if it gets too far, it's not uncommon for the second not to get anything. Personally, I prefer land notes. At least if things go bad, I can take back the land and resell it without, protecting against a senior lien. I don't want to deter anyone from doing second position notes, just not where I would recommend starting out. Seconds are definitely an investor's market. Investors can receive great returns once you know how to underwrite those types of deals. Oh, and one more thing. There's another ace in the hole when it comes to wanting to invest smaller amounts of money. Partials. You don't need to purchase the entire note to do some sort of deal. Oftentimes, the seller doesn't need to sell the whole note, just enough to take care of a particular need or want. For example, the note seller may still be due 240 payments. An investor could offer to purchase just the next 60 payments. Then the note reverts back to the seller, or they sell you more payments. When it comes to getting started, don't focus on all or nothing. What you do want to focus on is losing any perceived notion that you can't buy a deal because you don't have enough money or access to money. Many people, when starting out in the note business, flip some deals for both cash and experience, learn on someone else's dime. But after a while, Those flipping fees can be used to purchase your own notes, even if you start out small.